Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 24th, and it has been a great week. Good to be with you this morning, Jay, and everyone in the room. It's been a great week. So we are working at a very interesting time period. Okay, dollar is working on attempting a fifth consecutive day. We've made some pretty radical and really nice stretches in euro and even CAD participating kind of late, but catching up pretty quick. Aussie, Kiwi, Swiss at resistance. So just for the disclaimer, I'm flat here, looking for repositioning, looking for possible rebounds in some of these. But the levels have been outstanding. So on the menu today, we'll hit DXY, Euro, Dollar CAD, Aussie, Kiwi, Dollar Swiss, Dollar Peso, Dollar Yen, Gold, SPX, and I don't know why Sterling is at the end, but there it is. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. So a quick look at the DXY. I didn't give you guys an update on this week. This was from Friday, right ahead of, or Thursday, right on FOMC, on the back of FOMC. But the levels have just been uncanny, okay? This is the intraday chart. Here's what the weekly looks like, okay? We talked about 92.28. We talked about 91.92. Both key regions held for a couple of weeks. Weekly chart mounted. This is the first area that you're looking at as, or the second area I should be looking at as key resistance. Okay, weekly resistance. The first region that was really sort of troublesome for us was 93.89, 93.88. You got a 618 of the entire 2018 range. You got the 2016 low week reversal close. That made short order. Next major level, again, 94.65. Now, this is just the objective March low, but it also constitutes the objective yearly opening range lows. So definitely a level we want to pay attention to. It converges on basic slope resistance off of, or channel resistance off the yearly high. And I kind of softened the load there. I might have got a little early out on Euro, but I'm looking for a reaction here, okay? Here's what it looks like on the daily chart. Two equal legs off the low, 100% extension gives you 94.62. Again, that March low is 94.65. So you got a third reference of resistance as far as lateral levels go. Again, there's that slope off the high. That's what you're looking at on the weekly charts right there. Brings that into focus as your next major key level of resistance for DXY. So maybe a little give back, sure. A little pause or a little upset, a little recovery on some of the other majors against the dollar, sure. Still constructive above 93.65 or 93.66. Looks to me like a clean monthly opening range break. So I only got a couple days. Tomorrow's last, well, this is the last full week of September trade. So you got a couple days next week, but something to look for. Now, if it breaks through, an accelerated run gives you 95 and 95.55, your first major levels on the upside. This is big though. This is big though. And we need to see a daily close above this slope, above this threshold to validate the upside bias. All right. Intraday, here's what it looks like. And here's what it looked like, again, Friday of last week. It's the same setup. There's that gradient. We were waiting for the break. That ended up being a false break right after FOMC, right? Pulled back, opened the week at slope support. The 50% retracement was right there as our near-term bullish inval, 92.70. Never even got that low, okay? And then here's the rip higher. First level of resistance, 93.88, 93.99. Broke through that, offered support. Next level, 94.27. Final level, 94.62, 94.65. Watch for a reaction up here. Watch for reaction up here. Initial support, I'd look right back at 93.99, basically the 94 handle into 93.88, this zone right here. That's kind of the sweet spot you'd want to see hold. Bullish inval, I'm going to have to put it at the monthly opening range high. The August open was a nice level for us, but we're going to work with this. okay, at the September opening range high. Wouldn't really want to see much weakness beyond that 93.60s level, right? If we're going to continue higher in DXY. But that's the outlook right now um, for the dollar index. Any questions on this? Now you're seeing ongoing divergence into the highs. You're seeing, price actions getting real tight here and coiled. If you're holding longs, again, your limits, you should be peeling something off at 94.60s. If we don't get up there and this turns and buckles back below the median line, sit back. There's going to be a little bit of a correction. If you're in this swing trade from the swing side of the site, we're still 115, right? On the euro. We'll go over those in a moment. So I don't want anyone necessarily to bail, but from an intraday standpoint, I'm kind of looking for reaction up here at 94.65, 94.62. So where does that leave euro? Let's get into the nitty gritties. Here's what euro looked like last night. I told you guys I bailed right there at that 1659 level. We're a little bit lower from there now, about 20 pips lower, but might have been a premature jump out there. I actually had like more than 5 exits on this trade that we took. So as we gotten through these levels, this was, I actually should have left a little on, but in any event, this was big for me. Same confluence zone. So this is 100 off the high, 2 equal legs. Okay, right off the monthly high from this month. Gives you 1560, 1659. And then you have the median line. Now, if you take a parallel, okay, let me do that with you real quick. Sorry about that. Right, of that gradient, try to get as close as possible. Extend it off the lows. You still see is, you could slip back into 1620s, even the 16 handle before a larger recovery. Long story short, I'm looking for re-entries. So if we get back towards 1726, even a little bit higher into those former swing lows for the month, that slope, look for re-entry. A downside break below 1621, in my opinion, opens up the floodgates. That's the October 18 high. Okay. You have, this swing high right here from price, just lower. You have the median line for the broader daily chart that we've been following. So I just want a little bit of a reset on here to get back in. Okay. Almost scored 200 on that last move, but again, we're working on what would be here the 5th day again of declines, and it's just been a nice spill. So again, the monthly opening range broke back here. It's been a nice 3-day spill. You're bearish below 17 essentially, still looking for that drive in 1621, and again below that median line. I think this opens up. But immediately on the initial decline right here, curb your appetite for the shorts. Taking a longer look, going backwards here in euro, here's the weekly chart. And again, putting us at former slope support. This is the pitchfork that we were following from the 2015, 2017 lows. Beautiful pivots all along this gradient. And again, 2016 high gives you 1616. That same slope, that median line right there, lower parallel, break, resistance, resistance, break, acceleration, support. Add to that, just in case that wasn't enough, if you take a longer term series or look at the slope here, here's the original slope off of these two highs from 2008, 2014. We had a parallel off the 2011 highs that we were working with for a while, resistance, 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 breakthrough this year, and look where it is now. Whoops. That's this line right here. Resistance, perfect resistance in 2018. Break saw acceleration on the way up. We're there now. Okay, so there's a lot of things to look at that would suggest you're in for a little bit of a bounce, but with the same respect, if these levels give out, if 16 gives out, if dollar index gives out resistance, that should be an accelerated move. Okay, there's technical significance there. So that's kind of where I am here on these dollar moves. I loved it. It's been a great play. We don't want to get too aggressive here. The trends, we're working on the assumption that a more significant near term, medium term high was registered in euro, more medium term low in DXY. And so we should see these trends kind of carry over. That being said, we're coming in some areas of support on euro, resistance on DXY. Questions? And we're pretty quiet on data. You have some prints tomorrow, but it's really ancillary. So we also have the presidential debates as we get into next week on Tuesday. A couple more event risks start to flood the wires again as we get into the end of the week. But again, just keep in mind, this is the end of the quarter. It's the end of the month. Heading into the early next week, you want to be light. Okay, and if you see some kind of mean reversion trade here heading into next month, man, just sit tight. We'll probably get an even better entry, okay, to jump into a euro position or another dollar major. But it's been a great move so far this week. All right, so that's euro, number 2. Number 3, dollar CAD. Here's what dollar CAD looks like. So I'm kind of lucky. I was trying to take a position against this level last night. Didn't see anything that was really pointing out as a major trigger. Yeah, there was some divergence. The trigger never actually broke, so you never actually pushed a short on it. But my idea here is you're still at risk for exhaustion trade in Loonie as well. Excuse me. Here's dollar CAD on the weekly chart. All right, all of these trades, right? Pretty stretched on this bounce. Now, again, doesn't mean it's the end of the bounce, but the immediate stretch, you want to be cautious. So what we're looking at here is basic slope resistance. You got a little tiny channel here holding this high, but it's also sort of a gap zone, right? Momentum's right back at 50. Nothing's really screaming, watch out here, but certainly, not in a position to start entering new longs. Here's dollar CAD on the daily chart. That 100% extension converged right on upslope resistance. This is just a parallel of the support slope. That converged on 33.85. I want to see a reaction there. Now we're trading above. We closed there. We literally closed at 33.85 spot, okay? And then here we are to start off the day. Still kind of cautious. The big level on the upside from here is 34.50. That's the 618 of the near-term decline off the late June lows. And just a decent pivot. If we make it through there, there's really no opportunity to try to get into this if you're not on the swing side again, already long. Don't try to chase this. I want to see how today's close looks, and I'll have to reassess this next week if you're not already holding longs. Here's the intraday chart, and here's what it looked like last night. So we were right there, right? We were right there. You were starting to mark some divergence. This held into the Asia Open. Even after Asia opened a little bit, you saw some drift in there, but nothing on the account or nothing that would warrant or merit reversal or exhaustion. So there's really nothing to fake us in here, thank God. Push through. Next levels on the upside. You got that 618 at 35.50. Like I said, key resistance 34.86 into 35.15. It's a bigger zone, but it also represents a bigger pivot in price. So levels to watch for if you're holding longs. If you're not holding anything here, there's nothing to do on the long side. If you get an exhaustion pump into 34.50, and especially if today closes sub 33.85, might be a decent fade opportunity just for a near-term sort of pullback. I'm going to stay constructive here above 32.70 at this point. We'll choke up that bullish inval level, and we'll work with these 4 targets here, see how that pans out into the US Open today. All right, questions on Aussie? Or excuse me, on dollar CAD. Aussie's next. All right, so here is where Aussie is trading. This is number 4. And last night, kind of the main key focus, I don't know if you guys remember, but all the way on the way up, way back, when Aussie first started like making its rip reversal, the whole level of resistance that we talked about for so long was what? It was the 2019 objective yearly open and this year's objective yearly open. Gave you a range of 70.16 to 70.42, massively critical. Caught the highs back here when we tried to rip higher in June, pulled back. Was the opening range highs all throughout July before the breakout. That's the zone we're testing right now. That's the zone we're testing right now. One of the biggest losers against the dollar so far, just this week. You can see the stretch that we've made. I'm going to take you back to the weekly chart real quick on Aussie because I think this is very impactful. I just recently republished, or published, I should say, it'll be out soon on Daily FX, their quarterly guides and forecasts. And this is the chart that's on there, guys. I'm going to pull this back even further. We've realigned some of the slopes here that I was working on in some of the other previous charts you saw, but this is the dominant slope. Okay, this is the dominant slope off the 2011 highs. That parallel has been instrumental in every major sort of turn in Aussie, even as support for the last couple of years. That slope off the 2018 highs held here. You also had the May 2017 swing low, which was right here. Nice pivot in price. You had the 2019, 18 high, or excuse me, 19 highs right there. And both of those were such a nice spot. You closed above it, you reversed back below it on a weekly close basis, and we spent 3 weeks here trying to test this range again before making a move lower. Now, all things held constant, this is a break of channel support. So 71.30, which is the level we talked about all week, is a level to watch. It's sort of the break, the opening, right? Gave out the first major level. We're right back at it, 70.16, 70.42. I'm looking for a reaction here this week. A close below certainly keeps the downside bias in play, in my opinion. It also suggests that a more significant high was registered here. And would really risk some further losses. So all things held constant, we're testing support right now in Aussie. 70.16, 70.42. Watch that into the close of the week. Here's Aussie on the daily chart. Again, that range defined by those magenta levels. You can see base pivot zone right into that zone, both as support, both as resistance, right? And here we are testing it as support again, just lower if that breaks. You have a basic 236 of the entire yearly range, 69, 64, same parallel of that slope, drop slope off the high. There's the parallel, break saw acceleration. That converges down there basically over the next couple of days. Initial and instant, I guess, resistance right back at what we labeled as key support. 71.30, that same key level, look for resistance there on any recoveries. We'll have to reassess that scenario if and when. Aussie on the intraday looks like this. What do we always say about a break of downslope support? Typically and oftentimes, a break of descending slope support can be the sharpest part of the drop because you're in a downtrend, but you've broken support within that downtrend. So you get that new effect of new traders jumping in on the short side, floods things lower, right? And the shorts are all open. They're not covering it, so they're just letting it ride, right? So here's how it played out. 71.30, it was the level to watch. As soon as we broke that resistance for hours, shot lower. 70.76, here's 70.42, 70.16. Do something down here. Do something down here. If you're short, at least bring your stops down, take a little off the table, tidy things up a little bit. Again, initial resistance right back at 70.76, but the key resistance is 71.30 again. Don't want to see anything beyond that if this is going to hold. And continuation lower, you're looking for 69, 69.63. Any questions on this? It's been pretty radical how this slope has these are all parallels, guys, of the same gradient. So we'll just work with that here. And let me just see what this Okay, the 1618 comes in at 69.86. You know, might want to just leave that as a soft target. But if we do see this give out, I think it shoots through. I don't want to block that up. Just keep your eyes on that. Questions on Aussie? All right, that is number 4. Number 5, Kiwi dollar, also a big mover with a big old drop off. I still like the sort of formation here cleaner than Aussie right now. So this pitchfork off the highs from September, okay, gave you a nice median line crackdown, kind of hovered around that 25% parallel for a while as resistance. Next lateral level I have is 65, 6502 to be precise. And again here, very similar, these basic fibs. I should take that to the new high. All right. So 6502, we'll crack that 236 just a little bit higher. Sorry about that misalignment there. That's 6485, basic 236 of the yearly range, but certainly that and slope support come in just around that zone, just above 6470s, let's call it. So if you're holding shorts here, this is a one, again, I think it is a hold. You look for 65 first, you look for 64.85 first before you start to run into any major problems. But definitely, again, one of those trades where it's extended, it's extended. You're working on a 5th-day decline. You're testing the, range lows for the previous month. You're testing a basic fib support. You're basing slope support, all nestled just lower. All of these trades are thematically the same as far as their positioning from a technical standpoint. They're all stretched, but they're right into nice spots, okay? Both for some profit taking and for some possible rebounds, not for trend reversal. So again, if we do get some bumps off these, I hope to offer some nice opportunities again, but I definitely don't want to be trying to press this from here. So that's Swissy, or that's Kiwi. Swissy's similar in that, again, same thing, we're at resistance, but I have us here at resistance like right now, right? So you have the low day close, the previous low day close. Let me take it back here to the daily charts first. And here was our last update on Swissy. So Aussie, right, broke that level, so we're trading right here, right now, no change. Swissy, from the previous update, looked like this. We had already, remember, we talked about this early last week. We hadn't talked about this in a while, but we were coming back above this major pivot zone, 90, 80, 90, 91. Talked about this for months and months and months, guys. We opened and pushed right through. It closed support, all throughout the month. Kept our focus higher. We were looking for the breakout. First median line touch. Second median line touch, you had a really nice confluence at 92.20. I want to see a reaction there, and boy, did you get it. Just popped right through. We're now pushing right through this low day close with slope just higher, okay? So again, I'm cautious here. You push the low day close, you're testing slope, that seems to be holding, kind of struggling here a little bit. Anything northbound of 92.80 on an intraday basis, if it pops, you're probably looking for the breakout. A 38.2 takes into 93.50. Nice play. But from here, I'd lighten the load just a little bit. I'd be looking for some sort of reaction. Let me clean these levels up and just see what this extension looks like real quick. It's the 100, right? Where's that 1618? Okay, it's above 93.50. All right, keep that in focus. So again, this was also the 100 off the high, off the low rather, 2 equal legs. If we close above this position, you're looking for the break. But I'm looking for a possible exhaustion here into the US Open. Questions, comments, concerns. Initial support 92.20. Look for the median line to be sort of the break. 91.80 is where I labeled it yesterday. I'm kind of still looking at that region, maybe a little bit higher. to suggest you got a larger correction, but that actually might be a decent entry if we get down there. Questions on Swissy. Number 6, number 7. Here's Peso with a radical break. This thing, we hinted on it as we were trying to push through 21-23-16 here, and boy, that ripped, held a support in that same zone, ripped through, descending, trend line, resistance, and man, it's a ripper. There's nothing to do here if you're not in it already. I hope some of you caught this. The 618 was kind of the first area that we were looking at, thought might offer a little bit of a resistance tap. It didn't. We popped right through and tested that as support 3 times already. Look, next top side levels, you're looking for 22.89. That's going to be the former objective swing highs from July here. The 786 comes just ahead of that. I'll just show you where it is, but I looked at it this morning. I didn't think it was such a convenient level, but something to look at. Decent pivots, 72, 73, but 72.90s, 72.89, big. Again, a trade where, excuse me, if you're not already in it, there's not much to do. Here's a look at it from the daily chart. So not only did you break near-term upslope support back here, or a downslope resistance back here, which was this break, you also broke this multi-month downslope resistance here. Now you haven't made a daily close above, so just something to keep in mind. But man, you don't want to try to stand in front of a ripper like this. But thought it worth showing today. 38.2 would probably be your first major level to watch for on the upside. Questions on Peso? Make quick order of that one. Okay, dollar yen, number 8. Also a really clean play. So here are the peso levels. Again, we've broken through here. We're pushing through the 618 now. So again, keep those revised levels in mind with that 38.2 and the initial highs first. So 22.72, 70, 22.89, 80, and then that 38.2 are your immediate levels to look for on the upside for peso. Dollar yen looked like this. This thing was coiling up for weeks. He kind of snapped below this 105.30 level last week, but he came into a really nice hold, right? At 100% extension, slope support. You saw this vault. We talked about this on the Monday webinar. We talked about this on the Tuesday webinar. The probability, or just the outlook for a larger breakout, a larger just recovery in general. This was the first major level right back at 105.30 yet again. And man, we're trading just above that now. So here's how it panned out. Popped through here, ended up being the exact play. We wanted to stay constructive above 104.48, 104.40. This thing dribbled right into that zone, held. Nice opportunity for a long against that low. First level of resistance right here. Second level is this slope you're looking at in red. That's what we're sort of sitting at for the last, I don't know, day. And again, it's dollar yen. I don't know what to do. I'm out of the long, but if it were to buckle down, maybe a quick retracement here, look for a 618, a 38.2 tap before a resumption. The bigger level is from here, now that we're above 105.30, excuse me, 105.20, is that 105.85 level. It's the objective monthly open, the 618 retracement of the decline off that late August high, and just a nice confluence zone, right? So I don't want to tempt a new fresh long exposure from here. If you're holding longs, this is the slope you're looking to break. Remember that consolidation that we were in for a couple of weeks? That's the gradient. Pop back through that, look for 105.85, 105.90. If you're not holding any positioning, I would say that there is an opportunity for a near-term short scalp if you break 105.20, but even then, the stop is already 30 pips out. So I'm going to shelf dollar yen. I'm probably going to shelf dollar yen. Honestly, probably into the end of the month, but definitely into the end of the week. If we get a rip and some sort of reaction near 105.90s or even the upper parallel, I might actually be interested in doing something there to try to play a short, but not from here. So on the radar, but not in effective play on dollar yen with respect to what we're trading with here. Okay, that's number 8. Number 9, let me hit sterling first, and then we'll hit gold and SPX just to keep all the pairs together. Here's what British pound looks like, and here's what we look like. Early in the week, this was another one that played out pretty well. I removed the slope, this channel here, but this is this break right here. Into the start of the week, I was telling you guys, look, we actually closed below that channel, so technically it's a break, but let's see if we get that spike into that 38.2 again that we missed last week. Didn't quite get it. This 38.2 has been adjusted, or needs to be adjusted actually again, but didn't quite make it into that upper parallel or that 32. We opened up the week, little bit of a bounce, popped right lower. Okay, we took out that 618. We're right back at key support, and this is when I told you guys on Tuesday as we were heading into it, really watch. I'm very concerned about any short exposure here. This was a big level for me on all counts. Here's sterling on the weekly charts. All right, you're looking at the 2018 low week close. You're looking at the 2019 yearly open. You're looking at the 618 retracement of the December decline. We're still in that range, mind you. We haven't broken that high. And you see a clear and objective lateral pivot in price going all the way back to 2016. Okay, it's an important zone. Tell me what you want about the UK shutdown and about Brexit and about all the woes of the world. And I'm not belittling it or playing that downplaying at all. I'm just saying as it pertains to trading, doesn't matter. Support, and we're there. I'm not going to buy, but my short exposure is done. I'm not pushing anything from here. It could simply buckle below this, but it's going to be the break and retest that's going to put us in to try to play a short. But certainly this is a big level to look for some sort of reaction. All right, so the weekly charts are pretty telling as far as that lateral level of support now, former resistance being absolutely paramount. Here's what it looks like on the daily charts. Okay, you could see again, man, you just can't make this stuff up. Always take into account what previous price action has said. But when you have this many technical features all lining up, it's stupid not to pay attention. A basic 38.2 of this year's range governed even the close low. Look at this from a close standpoint. Can't make that up, right? 2693, 2710, you got a 20 pip range, even less, 17 pip range of support, major pivot in price here for sterling. Divergence into the low. So remember, whenever we're looking for divergence, we're looking that price action is not, or the oscillator is not validating a low in price, not vice versa. So we got a new low here, that low held. I mean, it's a hallmark of, watch for some sort of reaction. Again, if we pivot back below, my humble opinion, it should be a straight shot. It'll probably be a pretty, radical move like we got back here. But this for me is going to be pretty important here for sterling. Here's what it looks like on the intraday one more time. Even here, you got some, lackluster divergence, but it was divergence nonetheless. There's still no justification for trying to pull a long, guys, just as a disclaimer there as well. Here's the pitchfork we've been following. So everything that we looked at in the weekly chart, highlighting this key region at 2710, everything we looked at on the daily chart, here we are in the intraday, and guess what? Even near-term slope for the pitchfork we're following. Support, support, support. So I do have to sort of adjust this. Sorry about the mismatch here. Here's what you're looking at. There you go. Sorry about that. But just to show you the critical nature of this 2693, 2710 level, or 2711 level, it's huge. It's absolutely huge. Doesn't get much cleaner than that. So you have conviction on both sides, right? If the rebound or the recovery happens, I think you get free reign towards that median line. 236 or a 38.2 rather, of the whole decline takes you to Friday's highs, basically, just above the weekly opening range highs. If you get even a 236, which is not my favorite, you're looking at like 28.65, decent pivot there. But, both levels of which you look for exhaustion again, near-term bearish inval, downside break, 24.30s, 24.40s, this zone right here. Now, one other thing you could take a look at, just as sort of a reference, is you might be looking at this as, well, Mike, this is just a really tight near-term channel. Wasn't that a third touch? Yeah, it was. I tend just, these really sharp gradients, guys, you could work with something like this, but it kind of puts the onus on the recovery anyway because you're testing a resistance. And if you see this, I don't want you to get faked out, look for like a resumptive move per se, but just something to consider because you do have 3 touches there, technically. All right, questions on pound. And that's the FX block, guys, into the weekend. Let's take a quick look at SPX and gold. And if there are no other questions, we'll go ahead and wrap it up there. Here's gold first. Sometimes a break of the lower parallel can be the sharpest part of the drop, and here's the break. So we got that multi-week consolidation. I guess you can even say multi-month consolidation. There's the break. We talked about 1920 for ages. It gave out, and we saw an accelerated pop, failure ahead of that, and here's the secondary drop. I'm looking for 1836. I'm looking for 1836. So let me clean this up a little bit. And let me just take a step back and remind you where we're coming from. Here's gold on the weekly charts, guys. Never forget this chart. It was the chart that called the high. 2033 was actually where we closed. I think we closed 2034 on the breakout. We talked about the reversal the following week, and ever since then, we've been looking for a deeper drawdown. I think we just got it. A 38.2 of this year's range gives you 1836. I'll show you the measured move of an extension off that. Well, let me just show you here on the weekly chart since we're right here. A measured move of, oops, the extension, right? A measured move of this drop, 2 equal legs, it drops into 1803. Look what's there. Slope, 2012 highs. Okay, but just ahead of that, 38.2 is 1836. So you have very clear targets as far as on the weekly standpoint, what levels stand out, what levels matter. Watch those 2 levels on the downside. Watch those 2 levels on the downside. 1836, 1803 into 1795. Here's what it looks like on the daily chart. So this week finally broke an objective monthly opening range with this move right here. Keeps the focus for a late month low. Well, it's pretty late in the month, but here we are. Basic slope. This is a slope off the highs from late last month and early September, a parallel, 1 touch, 2 touch. We're there now. Upslope support for the breakout that we were in back here on that pitchfork all year long. Here's the 75% parallel. So I'm starting to think it's the same picture, guys. It's the same picture across all these trades where you've stretched. They've been the exact moves we've been looking for, really clean, but all of those moves kind of get into some hairy territory here. Okay, watch for some possible support. This is working on its 4th day, so unlike some of the dollar crosses where we're already on a 5th daily advance or gain, this is kind of getting a little tired. So look, we also want to keep into account something very objective. 1863, which was the last level I gave you guys, if I'm not mistaken, on the gold update. We didn't even add that on here. Must have been on the previous update. So right here, 1863. This was our first like sort of major, if the monthly opening range breaks, look for something there. So technically what bothers me with this and why I didn't even cover yesterday is because we closed right there. I didn't know how to interpret this. Literally the close yesterday was 1863, which was August objective swing low. So remember, the August opening range never gave out because we had that radical move, right? So we have to respect this on a closed basis. For some reason, if this were to, again, pivot back up, um, buckle right back above 1863, yeah, I think you could get a larger recovery in gold, sure. If this persists, and specifically if we close lower than that slope even, yeah, it's 1836, 1837. And just lower is going to be that 1803, which is 100 off the high. Here's the scalp. Here's the scalp. And again, here's what it looked like on the last update here on SB. There was the break, right? This was our near-term resistance bearish inval. We didn't quite make into resistance, but pretty darn close. Break. There's not really much in here until 1836. And that's this level right here. Okay. The 100 off the high, like I said, 2 equal legs clears 18. So there's room here. Boy, oh boy. Any questions on gold? Last but not least, someone was asking about this on the morning webinar, the public webinar on Monday on Daily FX, and I literally slapped this together right in the webinar, guys, and this pitchfork has continued to pay dividends. Here's what it looks like. It's just unreal how well this thing played. This is what Monday was what, the 21st, right? We were making this tank. We talked about this level of support. I said, watch 32.26, 32.19. It's really objective stuff. It's the yearly open, not Mike Boutros' opinion, not Jamie's opinion, not SB's opinion. Fact. It's the 100% extension off the high. Again, not Mike Boutros' opinion. Not actually, I don't even think this is the 100 off the high. This is a longer dated extension, but it was a huge pivot back here on the rally. So it was a zone that we were watching, and within that zone was the 25% parallel, which is exactly where we're trading now. We noted resistance. If we broke through this, we noted to look for resistance head at 33.37, bearish inbound 33.67. Guys, technicals at its best. Technicals at its best. And some people might be saying, well, oops, I just clicked out of it, SPX. Some people might be saying, well, or some people might not be saying anything. My point is, a lot of people will try to subscribe this to the move in the SPX happened because of Tesla's bad battery day, or the move here happened because of this, right? It's sentiment, guys. The market is a broader measure of sentiment. That's what price action is when we're looking at the chart. It's what we're studying shifts in sentiment. So the technical standpoint on Monday when we were looking and this thing started to rally higher, and I was telling you guys, well, look, wait, man, if it rallies, you're still looking for a resistance, possible entries right here, because we broke pretty major support with that move back here, and even this move here. So nothing fundamentally changed, right? No new stimulus packages got rejected, no new anything new, but certainly the market was in a corrective stance. My whole point, guys, is watch for a reaction right here today. If we close north of 32.19, look for the correction. Look for the correction. If we don't close north of 32.19, I think you're in for a bigger drop. Next major level of support, I have a soft target here at 31.81, which is the January swing low. But more importantly, the 100% extension, 2 equal legs off the decline from the record highs, gives you 31.38. Again, not a popular guy saying that. I wasn't a popular guy last week saying 32.19 either. But those are what the technicals suggest is the risk with weakness beyond here. That being said, you got DXY at resistance or support, or you got Euro rather at support. You got DXY at resistance. You got all these trades at the dollar crosses, which have reached their terminal thresholds, and you have SPX at support. So, man, over the next 24 hours, 48 hours into the close of the week, guys, we should get some definitive play, either a rebound or recovery off of these thresholds and pivot points, or a resumptive move, which again takes you lower in SPX, takes you higher in dollar. Any questions? I must say, you guys were a quiet bunch today. Aurelian, Jay, Pete, Ted, everyone in the room. Always good to see you guys. Best of luck trading into the close of the week. Again, data is light, so keep your eye on price action, and we will pick things up back on Monday. on Daily FX for the free session. Right back here on Tuesdays and Thursdays. Best of luck trading, guys. Same to you, Jay. Have a great weekend, sir. Cheers.